Hey everyone, another fresh week of trading. Today is Monday, the 9th of February, and stock markets resuming the upside as it looks like, at least in market momentum currently. The gold price continues moving higher. The US dollar obviously weakening, helping those markets, and silver is extremely volatile. We shall determine where this market might proceed to, and what the oil market is doing is what we're gonna examine today in our call. So welcome back. Fresh week of trading. The Friday story last week helped equities moving back towards higher levels, which was quite interesting. Astonishing market motivation, moving momentum, positive momentum to higher levels is obviously what helped the market momentum in general. And if we examine what the S&P 500 is doing, we can see potentially what the outcome might be, right? So Friday last week, last week was more or less with negative sentiment until then on Friday, the market started shooting back to the upside. Positive risk sentiment, some dollars weakness, obviously helping this market motivation. But now what we've seen in the recent past, at least, whenever the market started on a day moving lower, recouping its losses, the upside more or less continued, right? We saw this, the market pushing lower, and then 2 days in a row, followed by another attempt of moving higher in prices here on regards to prices. And the same story was true several times in the young past. That said, I might say we could see a bit of a continuation here in this matter, and this is exactly how the market is just looking like currently, with the upside momentum being back in full steam. What if the market, in regards to the S&P 500, closes even above the 7,000 level? Is that going to mean upside momentum might continue? And I would say for sure right now the positive sentiment remains elevated. If the dollar remains weaker, and if we can see that US data is going to support markets, because we have an array of data coming out from the US, and we shall examine this data which is coming out this week, and whether this can support the positive market sentiment. Let's start with the NFP data, which usually comes out every first Friday of the month. But due to this mini partial shutdown in the US, the numbers had been postponed to this week. Expected the last reading, or the last month reading, or the last period's reading, 70,000 new jobs had been created. Another positive sign of the best president, as he claims himself, of himself. Now, if the positive motivation is going to be positively continuing, we could see that upside momentum in markets will be positively affected. Though the story remains like this, right? If NFP data is positive, that means the employment status in the US is positive. That means as well that the Federal Reserve is likely not going to adjust rates, and that obviously could harm the market motivation and could harm the sentiment of the dollar. Obviously, it depends a bit on how the dollar performs. But if we have positive data, we see that the basic Federal Reserve is not going to cut rates. If they don't cut rates, the US dollar's momentum might actually initially start to appreciate somehow. The question is on the general trend of the US economy, as the consumer sentiment has been dragged to lower prices, or lower levels, at least for now. And with that, we come to the dollar index, which has been rising off a technical support zone, and it still looks quite cool here so far. If this supportive range does not break, the market might indeed push somehow at least slightly higher. Let's see, the falling trend line, the 50 moving average, will also obviously play a role here. But so far, we might see something we've seen in the past quite often. What goes down on Monday will come back up again on Tuesday, Wednesday, right? So we could see that this is just a temporary phenomenon here so far, based on the weekly chart, causing the dollar index to move obviously back higher. That translates as well towards the euro-dollar currency pair. Inverse correlation, as you guys obviously know, and we see that the euro-dollar currency pair has started to come down down last week again. But now the market and the euro is rising slightly. I still think that this is not really a kind of another attempt of the break of the upside here. The US dollar has been long weakening here, and it looks for now there might be still some strength. It's just potentially a bit of a reshuffle so far this week. How can we play it? Well, basically a sell stop trade here below the low point. If the market falls back to lower levels is what we would like to use here in this market. Same story, by the way, for the pound. Is not really doing any major change. The pound is and continues to weaken somehow here. We saw that pin bar candlestick last week, the market weakened somewhat of a doji candlestick, but it started slightly higher, but it looks like the ongoing bearish trend is going to continue. By the way, speaking of the bearish trend in the pound US dollar currency pair, we get data on Thursday, GDP data, and the GDP figure is expected to weaken from the 0.3 towards 0.1% level. And that might tell us that a weaker reading of the gross domestic product would actually help would help the currency pair to weaken as well. Weaker data, pound losing steam, US dollar maybe unchanged, gearing up some momentum against the pound here, pound US dollar currency pair potentially falling. So it depends a bit on this data, on these data points, how the market is going to perform later on in the week. And we shall check out the other amount of data which is brewing, right? Because we have quite a few news events this week we shall debate upon. The retail sales of the US expected to weaken slightly, so that's maybe not the major data point we want to focus on, but consumer prices are expected to slightly rise on the short term. However, long-term data expected to fall from 2.7% to 2.5%, and that's going to be the interesting story on Friday. If consumer prices continue to indeed weaken somehow, as President Trump is expecting it to be, if consumer prices weaken, this would help the Federal Reserve to basically cut rates again. Whether the Fed is going to cut rates or not depends quite a fair bit. The Fed President Jerome Powell still serving a couple of months as the head of the bank, and he didn't kind of, during the last meeting at least, give any further insights here. And the expectation for the upcoming meeting in a couple of weeks' time is not that the Fed is going to cut rates somehow. So it depends on the data points here, on the core PCE expenditures, but also on the consumer price index, whether there is going to be a rate cut being expected. Cutting rates would obviously help the markets to be positive. If rates are being cut, the US dollar is going to weaken, likely at least further. Stock markets expected to rise, but also gold prices are worth a shot because the gold market has basically kind of really gone back to higher levels. The trend line rise or the right off the trend line, this supportive trend here we've seen was long helping the market. And after this sudden push to the upside, consecutively falling towards this area, it has been tested. And now it looks indeed, that's here the daily chart, it looks indeed like the market is going to strengthen further. There's not much against this idea here where the market might kind of stop to rise further. The idea would be a stronger dollar potentially, or some other offsetting geopolitical tensions potentially. Because currently we see that, we'll debate oil prices in a minute, we can see that the slight weakness in the dollar again is helping this market, whereby last week's slight strength of the dollar didn't do anything much when looking at it from this perspective, right? So the dollar strengthened, the market went slightly lower, but not as much as the euro, US dollar, or other currency pairs with the involvement of the dollar, right? So the pound, for example, is kind of on the weaker side of things here, still in regards, and I believe that the market will weaken the pound and the euro, whereby the gold price looks actually kind of quite positive. So we get two pin bar candles in a row, one pointing higher, one pointing lower. Obviously, the market thereafter usually tends to kind of move into the opposite direction. So that brings us to the point that now the gold price might actually continue to rise even further. Looking at silver, we don't see anything major here. The market also fell below this 50 moving average. However, for silver, I'm not overly positive in this market. We've seen this strong push to the upside, right? So the market kind of gave us this strong more motivation here with this positive basic candlestick pattern, parabolic uptrend. The market kind of basically fell apart here. Last week, we got this bit of a slight doji candlestick here. And now this week, we see upside momentum, maybe supported by some dollar weakness. However, if margins have been increased, we know from parts in Asia, especially China and the US and the United States, that might tell us that not too many new buyers will step in. Obviously, kind of they can only apply less leverage using their own trading accounts. So that might mean the market might still be at risk. Plus, if we see a bit of a correction in equities. And again, it doesn't really look like this currently, but underlying the market structure, and we'll do here in the next couple of days another interview with Mirko telling us what he thinks about it in regards to the equity sector. But that would obviously help as well to drive the demand story lower, right? So if stock markets weaken, the demand turns less, and that would also obviously dampen the silver price. So far, we see that this, or I see at least that this market here with the parabolic uptrend here so far has started to weaken, and I see nothing else than about the previously kind of tested $50 level, where the market needs to be testing this breakout zone at first before the upside and the uptrend is going to continue. Guys, this is our outlook for the week. A lot depends. We're likely going to do some updates midweek here. Our 3-minute market video story is going to come up as well midweek with the non-farm payrolls as well as other data points. Please don't forget to subscribe to our channel and leave your comments under this video. See you soon. Take care, everyone. Have a good one. Have a good week of trading. Bye-bye.